Good morning, everybody. It's Tuesday, July 23rd, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 3/4 of a cent at 4.14 and a quarter. November soybeans up 2 and a quarter at 10.71. December Chicago wheat down 5 at 5.68. December Kansas City wheat down 5.5 at 5.82 and a half. December spring wheat down 7 and a quarter at 6.33. Let's start off with this China news.
So, China lowered interest rates on Monday in an effort to boost its economy. The People's Bank of China, along with other Chinese banks, cut rates for the first time in almost a year. The reduction shows that officials are serious about supporting the economy. However, the small decline in the People's Bank of China short-term policy rate from 1.8% down to 1.7% is unlikely to have an impact on borrowing demand. Experts believe that fiscal policy will need to be put in place if policymakers hope to restore economic momentum. China is currently experiencing its longest streak of deflation since 1999. Some traders believe that the news is responsible for yesterday's sharp rally in the row crop markets.
Yes, as a matter of fact, I've had several people tell me that this was the only reason that markets rallied yesterday because China did this surprise rate cut and it's going to result in increased demand or imports of corn and soybeans. I don't know if I necessarily buy that. Maybe this had something to do with it. I think the weather, as we highlighted yesterday, may have had more to do with it. Maybe it's just because we've got this massive fund short in the market. They're going from 1.8% to 1.7. That's not a big cut. That's much less than what we're expecting from the U.S. Fed here next month. But this was a story. It was out early yesterday. We missed it because it was out too close to the time we tape. But in any case, does China actually come in and buy more corn and soybeans because of that? That's the question. And maybe there's some things going on behind closed doors right now that we don't know. Maybe there is some Chinese business in the pipeline. Maybe yesterday's price action, the big rally in soybeans and corn would suggest that, but we don't have anything official just yet.
Above normal temperatures are likely to enter the U.S. Corn Belt this weekend. Most of North Dakota, South Dakota, and Canadian spring wheat country will run above normal during the next 5 days. The trend will continue and work its way into the Corn Belt this weekend. The heat becomes exaggerated in the 10 to 15 day period for the Western Corn Belt based on this morning's zero model. Rainfall looks to be a story of east versus west. Rain is slated to return to parts of the central and eastern Corn Belt during the 5 to 10 day period. Western Iowa, southern Minnesota, northern Missouri, and most of the U.S. plains are likely to remain drier even through the first week of August.
I understand that this 10 to 15 day period is a crapshoot. These forecasts are not necessarily reliable, but even your 5 to 10 is above normal with regard to temperatures, but not by a ton. You're talking 4 or 5 degrees. If this stuff for the 10 to 15 day period is realized, you're talking 10 degrees or more above normal for all of Iowa, northern Missouri, western Illinois, Nebraska, Kansas, southern South Dakota, and you don't really see any relief from these above normal temperatures at all in spring wheat country. I think the spring wheat market has reacted to that to some extent. And then the rainfall is kind of split. There's the Euro and the GFS are always in contrast with each other. The GFS would indicate that you've got this kind of line that goes across, say, the central part of Iowa, and that areas further west are going to see very limited rainfall really through the first week of August. So if you're going to have a problem as it relates to the soybean crop in particular, it's going to be in the west. It would be western Iowa. It would be Nebraska. It would be the Dakotas. It would be Kansas, because it looks like areas east of that are going to catch the rains. But, this is a long-term forecast and could change very easily. But I think my personal thought is that, maybe the China interest rate thing mattered yesterday. I think the weather maybe mattered just as much, if not more.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Seems like the U.S. Political environment has been turned on its head following the Trump assassination attempt. Everything's changed, and it's like things are changing by the minute. Pete Meyer was on yesterday. We talked about U.S. politics and renewable fuels. I think the general perception about the election is that, okay, maybe as far as agricultural prices go, prices of corn and soybeans, maybe Trump is a negative because he's going to come in and start a trade war with China, right? It's not that simple. There are other things to be aware of, especially as it relates to the renewable fuel space. Pete is an expert in renewables, and we discussed this among other things yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. Our new premium videos come out at 10 a.m. Central Time every single business day. Sign up this morning. I will forward you a copy of this morning's email, which includes our 6 most recent premium videos, a whole bunch of other charts and graphics that we don't show here, all of my cash grain marketing recommendations broken down by crop year, and percentage. Give that deal a shot this morning, guys.
U.S. corn conditions declined slightly last week. The crop was rated 67% good to excellent nationally as of Sunday, compared to 68% the prior week. The rating was slightly lower than the trade expectation of 68%, but was the best for the week since 2020. The change in conditions across the Corn Belt was a mixed bag. We saw improved conditions in Illinois, Indiana, Iowa, Kentucky, and Wisconsin. Meanwhile, conditions either deteriorated or remained unchanged in Michigan, Minnesota, Missouri, Nebraska, Ohio, and Pennsylvania. The crop is 61% silking nationally versus 41% last week and 56% on average. U.S. soybean conditions were reported at 68% good to excellent nationally, unchanged from the previous week, and the best for the week since 2020. The USDA estimates that 29% of the crop is setting pods versus 18% last week and 24% on average.
The corn and soybean conditions are good, especially for this time of year. You typically see crop conditions deteriorate as harvest approaches, and we're seeing a little bit of that, but we've more been steady. So the trade, if you're to look at only this item in a vacuum, you're going to think very much so that trend yields or better are possible for both corn and soybeans. There are problems. I know on the East Coast in particular, you look at North Carolina, 15% good to excellent. I think Virginia, places like that have had problems. I'm not going to say you guys don't matter to the market, but you don't matter to the futures market. You'll see some basis implication for sure, but traders don't look at that and say, oh my gosh, it's bullish. So I don't know. I'll say this: crop ratings are flawed. They're a flawed item. They're deeply flawed because they're just a view from the road. I think especially in a year like this where it started off really wet, things probably could look really good from the road, where maybe in reality they're not quite as good. But I'll tell you what I've heard from agronomists and people kind of in the fields is that, yeah, things are pretty good. And there are exceptions. We've had these weather anomalies. We had flooding, we had hail, we had high winds. There's a lot of things going on, or things that have gone on, but I think potential is still pretty good. What about wheat?
So U.S. winter wheat harvest is ahead of schedule. The crop was 76% harvested nationally through Sunday versus 71% the prior week and 72% on average. The trade had expected harvest to be 81% complete. The U.S. spring wheat crop was 77% good to excellent nationally, unchanged from last week. We saw declines in Idaho, South Dakota, and Washington, and then we saw improvements in Minnesota, Montana, and North Dakota.
That spring wheat rating at 77% good to excellent is really, really strong. There may be some weather issues moving forward here. Very little rain, above normal temperatures. I know that in Canada in particular, we've heard some of the weather guys kind of sound the alarm and say, this situation is getting worse very quickly, but the rating itself is very good.
U.S. corn shipments declined last week. USDA reported that 38 million bushels of corn were inspected for export during the week ending July 18th. The print was down 11% from the previous week, but up a whopping 194% compared to the same week last year. Soybean shipments were reported at 12 million bushels. The print was up 87% compared to the prior week and up 13% versus the same week last year. Wheat shipments fell below pre-report expectations at 9 million bushels. The print was down 62% from the previous week and down 34% versus the same week last year.
The corn number is good and contra-seasonally good. We usually aren't shipping that much corn this time of year, but I think with regard to corn and soybeans, the marketing year ends here in a few weeks. We're going to hit USDA's targets, I think, within a margin. Wheat, it's too early to tell, but those are not bad row crop numbers at all.
We did have a flash sale of corn on Monday. U.S. exporters sold 5 million bushels of corn to Mexico for delivery during the 24-25 marketing year. This is considered to be routine business. Mexico has been the largest buyer of U.S. corn on the export market this year.
Yes, they have been. Mexico has accounted for 40% of all U.S. corn export sales for this current marketing year, which again ends at the end of August. And they did what they've done double what Japan's done, and Japan would be the second biggest buyer. You see China in there at just 2.8 million for the current marketing. You're really kind of just an also ran. So Mexico's a big deal. We need them. We need them to stick around, and we hope they keep buying.
The U.S. stock market is experiencing a significant shift. In recent days, the Russell 2000 and Russell 1000 value indices have experienced impressive gains. Meanwhile, the S&P 500 has trimmed its gains. The shift in the market was not expected, and investors are now trying to understand what's behind it. Some speculate that it might be the expectation of Donald Trump returning to the White House, possibly, or the shift in the Fed's forecast to lower interest rates. There is also the thought that technology trade has become too crowded.
The big rally has been in the Russell, which is small caps, and the S&P, which is large caps, has corrected lower. The cut in interest rates that's expected is expected to be slightly more friendly for small caps. I emailed Jim Urio and I asked him about this yesterday, what his thoughts were on this rotation trade as they're putting, and he sent me a few things. We talked about this recently. He said lower rates, particularly on the short end, is an issue. Russell, companies in the Russell has three times the amount of companies that rely on floating debt than the S&P, which is super interesting. So if there's 3 times the amount of companies in the Russell that rely on floating debt than the S&P, then the rate cuts are a big deal for these smaller companies. He said the short Russell, long tech trade. So I think there were funds who were short the Russell and long the big tech companies has been put on for 18 months, and that there's some short covering going on in the Russell. In regard to Trump, he said Trump is viewed as more positive for small caps and the broad market, while Democrats are viewed as more positive for big tech. And then he said, in jest, probably because big tech and the Dems are the same entity. Well, kind of. I didn't say it, Jim did. But there's a lot going on here. It seems like a lot of things in the markets have changed the last couple of weeks with politics, with inflation prints, all that stuff. What did cattle do yesterday?
They were higher. Feeders were an average of 54 cents higher. Live cattle were an average of $1.05 higher. Box beef was down on Monday. Choice ended the day at $313.44. That was down 39 cents. And select ended the day at $298.33. That was down 47 cents.
U.S. dollars just a little bit higher this morning. Stocks are a little bit higher. Bonds are up. Gold's up $15. Crude oil is down 17 cents, and the September WTI at 78.22. Have a great day, guys. We'll talk to you on Wednesday.